Welcome to another episode of the Virginia Investor Podcast. Today we have a friend and an awesome real estate investor, Dillon Dull. I'm excited to get into your story and hear more about you. Welcome to the podcast.
Thanks for having me, and what you've done around here has been awesome. This peak is exploding. So compared to what it was 4 years ago,
Right.
This is completely different. Way more employees. You have a whole floor, so congrats to you on that too.
Yeah, I couldn't do it without support from people like yourself and our network and stuff like that. We're very fortunate to have some good people around us supporting us, and we'll get into your network a little bit later because, man, you have some good people surrounding you and helping you and supporting you. I remember early on, I think the first time I had ever heard of you was very early. I've never told you this. It was very early in my real estate career, I guess, like when I was just starting peak or somewhere around that time, maybe the first year or so. And I was doing all kinds of research, or maybe it probably was maybe the first year and a half or 2 years, but I was still heavily into research and trying to network and figure out who's who. And there was, in my eyes, this kid that was like on YouTube or freaking whatever platform it was that was like talking about his BRRRRs, but I didn't know it. And so what happened was, like, I'm kind of still like a little bit insecure at this point because I'm like, I know it well enough to do good at property management. I didn't know, I was still learning a lot and stuff like that. And my office manager comes to me and she goes, "Hey, there's this guy I saw on Facebook or YouTube or Instagram or something like that."
Might have been TikTok.
It might have been, I don't know. I have no idea. And so she comes to me and she was like, I don't even know why I'm telling you this, but she was like, "We should reach out to him. Maybe he can teach us some stuff." And that was like one of my first employees. And I was just like, no, like I know what he's doing. Like, and I remember getting like my ego like slightly defensive about it. And then, but again, like fast forward, I realized you're just an awesome dude and you were putting out some good content, and we definitely could have learned from you. If I had less of an ego or a little bit more confidence at the time, we should have reached out and probably sat down with you and learned some stuff. But so I will say, like, even before we met each other, I've thought highly of you and what you're doing and some of the content you were putting out and stuff like that. It was pretty cool. But I want to dive into it and see kind of your background. Like, where did you grow up? What was your childhood like?
Yeah, so I grew up in Northern Virginia, about an hour and a half north of Richmond. Went to public school. It's the way that I got into where I am today. Well, I guess how far back do you want to go? Because
so, like how was school? What was the experience? Did you play sports?
Yeah, so in school, first off, I really liked high school. I had some good friends. You know, we did all the classic stuff like ding dong ditching and all that. So, you know, we had a fun little high school experience. Right. I wrestled in high school, so that awesome. Actually taught. I think that I probably wouldn't be where I am today without going through wrestling. Because it teaches a lot of discipline. You had to cut weight. You had to, drink so much water. The practices were so tough, and it kind of helped you overcome a lot of obstacles. Right. So I think without doing that, I don't know if I would have had the discipline I do have today. I also played tennis in high school, which is like on the opposite end of wrestling, where it's like a lot, I would say, not easy, but not as hard, not as like your mindset in tennis is completely different than wrestling.
What got you into tennis? Like what? Why? Because wrestling is. I guess it depends on where you're from. But when I was growing up, like tennis is a less common sport. I've always loved playing tennis, but like it's a less common sport, and usually it doesn't mix with like if you're a wrestler, you're not playing tennis. Why did you choose tennis, or was tennis the primary and wrestling was like your second? So
my dad played tennis in high school, so. He got me into tennis. He really wanted us to play, so that's why we played tennis. I enjoyed tennis too. Yeah. It just the discipline from the wrestling was definitely exceeded tennis. And
that's one sport I wish I would have done was wrestle. And tennis actually too. Like I think about that because I really enjoyed playing tennis, and we played a lot like outside of school unofficially with buddies and everything. But wrestling is one thing that I think. Every human being, wrestling or jiu-jitsu or some sort of grappling sport at some point in their life, they need to experience for a few years for the discipline, for the camaraderie, for the challenge, and kind of like it's interesting going one-on-one with someone and someone is going to lose.
Right.
Like, it's a very clear delineation of like what you did right, what you did wrong, and then how you handle that and what you learn from it and things like that.
Yeah. I would have thought, based on your build, that you were a wrestler back in high school.
Yeah.
But
I wrestled all my buddies that wrestled, and I loved it. But for some reason, I just couldn't get into doing it officially. But then later on, I got into jiu-jitsu and really, man, I absolutely love jiu-jitsu. And I since have had a pretty nasty injury not doing jiu-jitsu. It was doing something else, but that has kept me away from it. I still, now that I have a son who's 5 years old, I really want to, like, I've tried to dip my toe back in and see if I can do it. I need to figure that out. But,
yeah. I'm trying to get my son, do everything in my power to get my son to want to wrestle too.
Yeah. I think the trick is just acting like you don't really want him to.
Is that the trick?
Yeah. So like I'll try to like push my son and daughter when she's old enough to like try jujitsu, but then he doesn't want to, and then so I start talking about like how he shouldn't do it, and then now he's like kind of like, Dad, I kind of want to go try jujitsu, and I'm like, okay.
I might have to start that.
Yeah.
Once he's old enough to understand. But
yeah, I think around like 4 or 5 or something like that.
Yeah.
So you're getting through. Were you getting good grades? Like focused on education, and did you have like massive ambition for a career afterward, or were you just doing your normal high school thing?
I had decent grades. I mean, I got denied from like JMU, Virginia Tech, and all those good schools, and I did get accepted to VCU.
Got it.
So that's actually why I'm in Richmond.
So you went to VCU.
So I went to VCU, yeah. Studied accounting there. So
Interesting.
I got an accounting degree, which helps a little bit in real estate. But I mean, they didn't really teach you how to use. In college, they didn't teach you how to use QuickBooks. They didn't really teach you like the details.
Right.
So I did have to still learn a lot, but at least I had the base knowledge of accounting.
When you say you were studying accounting, like, but they're not teaching you QuickBooks and stuff like that, is it financial reporting and?
Yeah, it was like how to bookkeep, but not actually doing it. Like it would be a lot of paper writing. So it'd be like debits and credits. Like how do you balance this? The tax classes really helped. I did like those because you kind of had to prepare a whole tax return.
Yeah.
Based on someone's scenario.
Right.
And that really helped out a lot. Even though obviously I don't prepare my own taxes because that would take a lot of time. But yeah, it helped out in that aspect. And then so I had a really good understanding of what you could write off, what you can't write off, what goes into the or what is an expense versus what you have to depreciate, what capital expenditure and stuff like that.
That's a solid base to have.
It is.
That's a really good. Why did you choose that?
Well, my mom was an accountant, so that was one thing. But I think it was more of I didn't want to go to college and do something that I wouldn't have a job after.
Interesting.
And I was either debating accounting or computer science and like something like of that stature where you're almost guaranteed to have a job after. Right. And so that's kind of why I picked it.
Smart. So you're going through college. Well, let's say, like, when did you find real estate investing? When were you kind of like opened up to that?
Yeah, so when I was growing up, my dad actually in Northern Virginia, but he did it over in Front Royal area.
Okay.
He had a huge landscape company.
Awesome.
Before 2008. Then 2008 came, and then he saw the real estate prices. So he started buying and flipping houses. Awesome. So during the summers of college, I would work with his construction crew. And I think he'd pay me like $10 an hour, which back then I felt like I was like getting a steal. Yeah. Right. And was learning how to paint houses, how to do some electrical, how to do outlets, like small stuff like that, obviously. But it kind of helped me learn like what needs to be done to go into a house from like start to finish. Because we'd be there for like 3 months. Some of the houses, they needed like full gut jobs, and we'd be there for 3 months and kind of. I saw the whole process of that whole 3 months, even though I was just a helper, but it helped me learn like what needed to be done. Man,
that's incredible. So your father was an entrepreneur, had a landscaping company, and then started real estate investing after the crash and saw the prices, and then you were able to kind of get in and do the work and like get your hands dirty and learn how that industry works from like a labor standpoint and what it takes. And I'm guessing you probably didn't know a whole lot about the numbers at that point, but then you go to college and you learn a bunch about the numbers.
Right.
When you were going to college, did you have something in your head that you were going to start real estate investing? Had you already started at that point?
No, just besides working for him or working with his construction crew, I haven't in college. I wasn't doing it. Besides that aspect of it, I did always want to do real estate, even when I was going through the accounting course. Right. So the way I looked at it was, after college, I'm just going to try and go full time in real estate. And
awesome.
And if I don't go full time in real estate, at least I have an accounting backup. And so after college, I graduated, and my dad, because I graduated and I had time, my dad actually bought a house in Richmond for me to manage and flip. Yeah. So I was going on Craigslist finding contractors and stuff,
cool.
Working full-time on the property too.
Yeah.
So, and I would put a little bit of my money in, and he would give me a % back of the profits. So
cool.
I think we did 1 or 2 deals together. That kind of got me my base.
Right.
And then from there, I started just dabbling into my own stuff.
Did you really get a chance to study the numbers, or were you really focused on like the deal itself, those first 2 with your father?
The acquisition of it, I didn't really get much process because he's like, hey, I got a house for you to work on. So I kind of I was more of the employee mindset. Like, he's paying me $15 an hour, and then plus I get some of the profit. But I was more of the employee mindset where it's like, oh, $15 an hour. I wasn't thinking of the bigger picture of all the percentage of the back end.
What opened up your eyes to the bigger picture? Because a lot of people miss that, and then they see it when they're 70.
Yeah.
You know, just kind of like thinking about what your dad does or something, or did someone come and like tell you something?
So I think it was a couple things. It was me just watching my dad do the things he was doing with his company as well. But I think it was me listening to podcasts, Bigger Pockets, while I was fixing up the house.
Sweet.
Because I listened from episode 1 all the way to 4. Like at the time there was like 300 episodes, but I listened all the way to 400, like after, and it just kept repeating. You know, buy properties, hold them. You could do the BRRRR strategy, and so that really gave me the most confidence to actually go out there and start buying on my own.
That's cool. I think me and you are similar in that regard. Where when I found Bigger Pockets, there was probably a few hundred. I forget like what year it was, but there was a substantial amount, but it wasn't in thousands or whatever. And I remember I was like, all right, I got to start at 1, because I look at it as like episodes, like you can't miss. And so anyway, I was like, let's just start at 1. And then I think once I got into like a few hundred, I was like, okay, let's pick and choose. But it was enough to let you know about financial freedom and how people are doing it in different methods and different areas and just all kinds of different aspects of real estate, which then I think got really difficult for me because there were so many different avenues you can go down. You just needed to pick one. Like it's hard to do all of them, right? And Bigger Pockets, like you see all. You can do Airbnb arbitrage, you can do short term, you can do long term, you can do flips, you can do wholesaling, you can do, I mean, we could go on forever. There's tons that you can do, and each is its own like separate business essentially.
Especially nowadays too. Like back then I feel like they were just strictly on like either flip or buy and holds. Right now it's like mid-term, short terms, like wholesaling, lending, all that
we
stuff.
Had it was a curative title wholesaling. Maybe I'm wrong on that, but it was like curative title work, I think is maybe a more appropriate term. But one of the guests on here, I was like, what are you doing? So what are you doing now? And he was like, curative title work. And I was like, oh, what is that? And he was just like, we're going to Texas. We're finding things that are like, have massive like genealogy issues in the title. And so we're not even, and we're buying this house and we're saying, we'll cure the title and then we'll sell it. We won't even see the house. We won't even step foot in it. We're just fixing the title that no one else knows. So they have genealogists, whatever, the people that study family like linealogy and like who's related to who and stuff like that. And so they have those. They have attorneys. They have like they have a whole team set up. And so they're buying properties at like massive discount, curing the title, and then just selling it with a title without clouds on it because they've gotten it all straightened out. And so that's what they're doing. And I'm like, dude, there are so many avenues to make money in real estate. It's insane.
So they buying a broken title when they buy it, like with the assumption that they're going to fix it.
Yeah, for a massive discount because they can't. No one can sell it because there's so many like issues with the title. Yeah. And so they go in there like a mechanic and they repair the title and like clean up all these different areas. Yeah. And then sell it with a I guess a clear title in a sense.
That's kind of cool.
Yeah, it's insane.
It's a new way.
Yeah. And I'm like, why Texas? He's like, because the laws are different there. So like they've studied the laws and regulations of like what they can do and what information is available. Isn't private or is private and stuff like that. So it's easier to do in Texas.
Okay.
So anyway, it was really interesting like learning that stuff. So still today you're learning more ways that you can get in and do stuff like that. So you're listening to Bigger Podcasts, you're doing flips with your father. How old were you at this time? This is during college?
First year after college. So I was 21, 20, or 22-ish.
Awesome. And then you decide, hey, I'm going to go just start doing this on my own. Like you think it's it's viable to do that. Were you using your father as like a private lender? Had you understood the concept of private lending, or did you make enough capital from these assets to go start buying your own capital?
So that's one thing. He didn't really give me money or loan me money,
Awesome.
which is kind of good because I would have to build my own connections. But the first one I bought was such a cheap price. It was $20,000 in Petersburg.
Awesome.
This was in 2017, and it didn't need too much work, obviously. And I still had a couple full-time construction crew or construction people to help me. So I bought that property and needed like $4,000 or $5,000.
A $20,000 house in Petersburg, which is insane, and it didn't need a lot of work.
Mm-hmm.
How did you find the deal?
So that one I found off Craigslist. So I would always go home and just every night just look for deals on Craigslist.
Right.
And then I thought it was the owner. I didn't know anything about buying a property because I've never actually bought one.
Right.
So I called him, and it turns out it was a wholesaler, which I still didn't know.
Okay.
And he was, as soon as he said, okay, we'll do 20, because he listed for like 25 or something, or 22 maybe, and I came down to 20. He's like, okay, well, let's call today and watch some college football at 20,000. Like, that's literally what he said. And then my heart just like sank. I was like, oh crap, I just bought a deal in Petersburg. And so I went to go like meet with him to sign the contract and everything, and I was giving him the EMD, and they're like, no, we don't take this goes to the title company. And I was like, oh, okay.
Yeah, that's awesome. Man, that's incredible. So, and man, it's a different world now too. Do you still look on Craigslist for anything?
I do it like once every few months,
right?
But it's such a little amount on Craigslist.
What does a description like that look like in 2017 for the $20,000 house? It just says house for sale, $20,000, or a contract for assignment or something like that?
I don't even think it said assignment of contract. It said house for sale, $20,000, investor special, rent. Like the classic things you would probably see from a wholesaler.
Was it vacant?
Yeah, it was vacant. Okay. So I went and looked at it, and it didn't need much work, and turned out I fixed it up, rented it for $600. But the thing that was crazy, and I realized this after I did it, is I fixed it up, rented it out for $600. Then I went to Citizens First Bank right up the street and got a loan from a commercial bank, a 5-year ARM loan, 25-year AM, and it appraised for like 50 or something at the time. Yep. So I pulled out 35, and then so I got like maybe 8,000 more than what I put into the property, and it cash flows.
Wow.
And then that's what like really changed my mindset. It's like, dude, I could just keep doing this. If I have no cash in any of these deals, I could just keep doing this and cash flowing and making a lot of money and building wealth that way. It's
almost like people say if it's too good to be true, it probably is. This is like one exception that feels too good to be true. But I remember someone in my family had, after about a year or two of like doing BRRRRs, they had been tracking what I was doing and like asking some of the numbers on it and stuff like that. And he said, something about what you're doing is illegal. Like, it's not legal to do what you're doing. I'm like, I mean, I'm working with attorneys and like title companies and like closing agents and all that, and there's multiple parties involved. Like, it's legal. Like, I'm a licensed agent. Like, it's not illegal. It's something you should be doing. And it's like a story like that makes you feel like something's got to not be right. But like, you found it. You're obviously working with the right parties and stuff to make these transactions happen. And then you realize, like, holy cow, like, this is actually, like, you could actually do this. If you look at what's really happening, you're buying a broken asset and you're fixing it and you're adding all kinds of value. And obviously it's a business, so you're not going to do it at no margin. And so you just do it very wisely and appropriately to where there is a margin. And then that margin is when you can refi and get your money back, pull cash out, or just like keep a really small mortgage and get the capital you invested out of it, and then cash flow.
Right.
And so it's not like that, like it's not that mysterious,
and
right?
It's not.
So you put in a few thousand to fix it, you paid about 20 to buy it. But you had that capital, right? Like, you didn't have to borrow that capital?
Yeah, so I was very short. I had some stocks that grew from like maybe $3,000 to 8,000.
Right.
And so I sold the stocks, and then I had enough saved up to actually purchase the property.
Sweet.
And yeah, sorry, go ahead.
So so you got your money back from there, and then now you have a little bit of capital, but now you have a cash flowing asset that probably cash flows a few hundred a month, I would assume. So then I guess you go find more.
Yeah, and stayed in Petersburg for probably like my first 8 properties. Just kept doing that same strategy. And then I got enough where it's like I could just put 20% down, because I was buying them for like 30,000. So I had to put 20% down, 6,000. So once I refinanced enough to like have enough cash, I would just buy them with 20% down on 30,000. Right. Go get a DSCR, or not DSCR loan. They were 25-year AMs, which I guess technically are DSCR loans, but they're 5-year ARMs.
Yeah.
And then basically just put 20% down on a couple. And I just kept doing that, and then I started moving to Richmond. And obviously those were a little bit more expensive, but that's how I got my base start is in Petersburg.
So in your loans, you're going to a local bank, right? Like a community bank. Get these. So you know what I mean? Like the refis, you're going to a community bank.
Right.
I know them as portfolio loans. Like they're portfolio loans that the bank can determine the terms. They don't have to go out to all these. It's not like insured or anything. They're typically 20 to 25 year amortization with 5-year ARMs or sometimes 3-year ARMs. But those banks just are basically loans that they're going to keep inside of the bank in their portfolio.
Yeah.
A lot of people hear portfolio loans and are like, well, I don't have a portfolio of houses yet. You can go to these community banks and get portfolio loans. It's just loans that community bankers keep in their portfolio, but that means that they can work directly with you on like the terms. They might have to get like a vice president to approve it or something, but it all stays within the bank. And it's awesome because it's all based on your banking relationship.
Right.
And so if you have a good banking relationship, they'll just pop out these loans for you. And they do care about DSCR, but I even had like the same bank where I'd done 10 deals with, and then on probably the 10th one or 11th or whatever deal, I went to refi and was like, I need this amount of mortgage, here's a lease, whatever, did all this. And there was, I think a vice president called me and was like, hey man, we have a great relationship. We've done a lot of business together. We really enjoy working with you. But when you do this refi, you're actually going to be at like a 0.99 DSCR. Like this is not meet our requirements, but he was like, but you got a big enough portfolio with us. We have enough money out. Like your global DSCR is whatever, like 1.6 or something like that, even with this house. And they were like, so we're good. Just don't put me in this position again. And I was just like, I appreciate it, man. But like that's what the relationships would do with these portfolio loans, like are just awesome. And then the DSCR, which you mentioned, like a specific DSCR loan, my understanding is like it's solely based on the DSCR, and it can be 30-year fixed. You know, in many cases. And
that's what I get nowadays. I don't do that. Well, yeah, because the DSCR for the 30-year fixed is actually easier to qualify for since the payment's a little bit lower.
Right. Yeah, they like check your credit, and I mean they check a few things, but it's very basic.
Yeah,
but and the interest rate isn't terrible on those either. Like they're pretty reasonable.
It's better than conventional now, actually.
I have DSCR loans. I think on all my properties that aren't seller finance and stuff. Like all of the properties that have loans on them from a bank or a lender are DSCR, and I was able to refinance them, and they're somewhere in the 4%. Like
you did 2021.
I did it in the right timing. Yeah, it was like 21, 22, something like that.
And those are on 30-year fix?
Yeah.
Oh, yeah.
Yeah. So I'm like, want to hold on to those.
Yeah.
But awesome. So you're into investing. You've bought. Now, are you still doing Craigslist for these next few deals in Petersburg?
Yeah, actually.
Cool. Have you developed like friends in networking yet, or like any kind of relationships at this point through your Petersburg houses?
Not too much, just with the sellers, basically.
Got it.
Yeah, not too much. And I started like going to the Ring meetups. I think like after I bought like maybe 4 or 5 properties, and then I heard about Ring. I didn't know there was any meetups in town.
Interesting.
Until I met up with somebody who said to come to Ring.
That's pretty cool that you made it to 5. And I'm sure like you could have kept going, but there are a lot of people that are just doing it on their own that don't know there's actually a really cool community of investors that are open to share and have an abundance mindset and like want to hang out and talk through deals and share deals and stuff. But there are people out there that are just doing it on their own. But for you to be so young and to essentially start your business and get up and running to 5 or 6 before you had a community of support is pretty, like you had your dad to talk to, whatever, you had your construction people, but it's pretty cool that you were able to get that far.
I really do think it's mainly because of the podcast I listened to.
Yeah.
That was probably the biggest thing.
That's another. There's so much resources out there that like can help you through this. Like you can really hear from very experienced and knowledgeable people without knowing them or without having those relationships. So that's cool that you were that resourceful. As far as managing the properties, what was your experience again, only in Petersburg, the first 5, 6, whatever, what was your experience like learning how to be a landlord and what the laws were and how you should operate?
Yeah, I didn't know too much. Of
there's
course, everyone starts that way.
Yeah, for sure.
The only thing I was thinking is if a tenant doesn't pay me, I'll just do cash for keys and get them out and stuff like that. Yeah. That way I don't have to go through the eviction process. Right. But some of the ones I bought did have tenants in them, and they still have tenants in them today, so that's kind of cool. The first one I bought obviously didn't have a tenant in it, so we put it up for rent. They moved in. 2 months later, they're like, I want to move out. So they moved out. It was vacant again.
Yeah.
And I still have that one today, and that one's still a struggle. We're doing an eviction on that one, and I actually think I'm now going to sell that one once we get this person out.
Yeah.
But as far as the rent, because Petersburg's a little bit tough. I was going house to house collecting cash from these people, like back in the day. I feel like a lot of people did that before. They got a little bit bigger, but I was going from door to door collecting cash, which was really cool because I like got to feel it. Yeah. But it's not the way to scale.
Yeah, man. What do you have any stories you can share of like just some lessons learned from? Because again, like you expect there to be like you're heavily in a learning phase as far as the landlording goes. But did you have any experiences that really like woke you up to what actually being a landlord is like not just buying and making the investment and stuff like that? What was it pretty smooth? Like did you buy it and you were like, hey, it actually, like you didn't feel like going and collecting rent and like knocking on doors, but was it pretty smooth relatively, or did you run into any like kind of nightmare scenarios that you had to learn through or get attorneys involved with or anything like that?
During my first few, I didn't have any really bad nightmare scenarios, so yeah, that is good. I would say we didn't run credit super well and stuff like that, because in Petersburg you don't have that much of a pool of people with good credit that want to rent. So we kind of had to lower our standards pretty low. So I think that's why we had a lot of turnover. To stop that, I don't know if there's a way to change that in some areas, because just the tenant class is not the greatest. So you kind of just we just have to lower our standards a little bit. And as far as anything like legal issues or anything like that, I think because I bought the property so low, my mortgage payments were like really low, like under $200. Mm-hmm. I wasn't that scared. And if you have 4 or 5, I wasn't super scared if a tenant didn't pay for a couple months, because if they're paying $600 a month and my mortgage is $200, I'm still like in the positive for economies of scale over 5. So I think my risk tolerance was really really high because of that.
Right.
So I wasn't too worried about stuff happening, but as mistakes, I don't know if I'm really had anything like detrimental mistakes.
That's good. That's good. Yeah. And it is, we hear that a lot too, where like people will call us for help and they'll be like, they haven't paid in months. And we're like, what have you done? And they're like, no, we just keep calling them, and I'm like, you got to start a process. Yeah. And at least like, it's cool if you're working through payment plans and like working with it. That's awesome. That's great. But you should still start a process and like dictate some sort of like guideline of like what this process looks like, regardless of what that process is. Mm-hmm. For us as a professional management company, obviously like our process is starting, sending the pay or quit and like going through that. But we will still, I think we have in the first month that payment is not made, within the first 30 days, I think we have like something like 19 touch points with that tenant to try to help them before it crosses the line of 30 days, because that's when things start getting like pretty serious. But we've eventually built that process early on. It was just like send the pay or quit, let's just do that for everyone. But there are a lot of self-managers that will listen to the tenants and they'll say they'll pay them both next month, and it'll end up being 3 or 4 months, and then there's no process in place. And we're like, you just got to, it's a business, so you got to run it by the process, and then give grace when you can, and or set boundaries when you can, as long as it's mutual with the tenant. But yeah, it's interesting. That's awesome that you, again, at that age, with the getting into it and going to a relatively rough area and being able to do that successfully without a whole lot of like nightmare issues is awesome. That's good to hear.
Yeah, I think one thing that did help me was I was the one managing, so the tenants would all have my name, number, and all that, because I had a small amount of units. Right. So I think that kind of helped me not have to do an eviction. Mm-hmm. Everything would kind of be worked out, and like be like, okay, fine, you don't have to pay this month, but be out at the end of the month, something like that. So I think that was an advantage that I had, because I was self-managing, and they probably felt at least some sort of heart, be like, hey, this guy.
It's not a big corporation. It's like, because that's what a lot of people assume, is like they're a massive corporation. They don't need the money. Like they're just, and now that they're asking me for money, like shame on them. They don't need it. But if you're showing up as like a kid, knocking on the door, collecting rent, it's you build that relationship and rapport with them and things like that. So when you and you're doing BRRRRs for most of these, like that's your strategy?
Yeah. Mm-hmm.
Are you doing content at this time?
Yeah, I am actually. I started doing YouTube videos of me walking through the houses, showing all the fix-ups and everything.
What was your thought process on that? Because that was that was interesting. Did you see other people doing it? Like, did you think it would bring you more deals or build your community? What was your ambition with that?
I think just when I was young, or when I was buying these, I just kind of wanted to show people what I was doing. It might have been kind of an ego thing, like I'm showing through the house, like, this property I'm just bought and stuff, and it showed the renovations. And I also kept hearing that, build a brand also. For sure. And I think that does help a lot too.
We did. I mean, to that point, like literally we found you in my opening story, right? Like we found you online and we were watching your videos and we were like, dude, this guy is like, they're house after house after house. Like he's doing stuff. And then, he's doing the BRRRR method. Let's look into that. And, so, definitely was good content that you're putting out. So it was just interesting you got into that because there's obviously a lot of content being put out. And of course we're on a podcast right now, but there's a lot of content being put out. But for me, it felt a little bit early. And you were clearly like younger at that time. And it was just you don't normally see it, or at least back then I knew I was newer to real estate, but I hadn't really seen like someone in Richmond that young buying that much property and then putting out content about it.
Yeah, and I think me being young at the time helped out a lot with a lot of viewers.
Because you expect, especially like we expect that someone older who's more established is going to be buying some houses if they're an investor, right? So I guess you find some success in Petersburg and then you choose to go to Richmond. What was the thought process behind that?
First off, I lived in Richmond, so I was a lot closer to the properties, which was a lot better. I figured the tenant class would be a little bit better. At all these meetups, everyone would always talk crap about Petersburg, and I was like, maybe I should start moving to Richmond. And I kind of just wanted bigger and a little bit better properties that would appreciate a little bit more over time, even though Petersburg actually has appreciated a lot too.
It's come along. So we kind of joke and say it was a really rough market, but it's come a long way since then. We have had always said we would never manage in Petersburg for the first number of years in business. We just had no interest in doing it. And then we went down to Petersburg and we have some really nice assets and we have good tenants and stuff like that. Yeah. I think still you have to be pretty selective, but it can be a good market to invest in. So I would have no doubt your properties have done very well.
Yeah. Some of them have doubled based on what I bought it for, of course, or tripled even.
So you were looking at maybe a better, maybe a stronger tenant pool, but also like a much higher population.
Yeah.
And then just different areas to invest in. Still looking at single family houses? Yeah,
mostly. I mean, I did buy a quad in Petersburg too, and a duplex in Petersburg before I started investing in Richmond, but for the most part, single family houses.
What sort of things started to change with your strategy as you started to scale? Because you got up to a significant amount of properties. You started to hire people. Like, what did your business start to look like, and what sort of challenges did you face when you had to scale?
Yeah, so when I had 14 units, because I was managing them all by myself. Mm-hmm. I was listening to Rich Lennon. He was really high on like virtual assistants. He had his course and everything of how to hire them. Yeah, I know. How to hire them and everything. So I kind of did what he's kind of said. Is just like hire a virtual assistant. So 14 units, I hired a virtual assistant to help me with the management of the properties. Brought him on full time. He's in India, and I still have him today. That was in 2019 when I hired him.
Awesome. He still works for you today.
He still works for me today. Yeah. Which is cool because now he really knows my business and everything. He does all my bookkeeping too, which is cool. Taught him how to do that. And answers. Well, now I have someone under him that answers the tenant phone calls and all that. So he kind of manages that person. And then if it gets past him, then it comes to me. But I think hiring your first person should be earlier rather than later. I'm sure you can agree with that too. Yep. You should do it before you're ready. I heard Brandon Turner say that once at a Bigger Pockets conference.
It's very smart.
Yeah, hire before you're ready because I think then you'll be ahead of the curve.
Yeah, man, that's a really good point. Like there are so many people. I will talk to other property management company owners. It's like they're still doing it all themselves and they're at 100 units, 200 units or something, and they're like, I'm worried that other people aren't going to do it as well as I am. And I'm like, well, what's your goals with the company? If they want to scale the company, they have to hire, but they're never ready to hire. And I think the statement for maybe two reasons: do it before you're ready. Do it before you're ready is because you're never really ready to like hire your first employee. Mm-hmm. Like now it's easy. Like we have plenty. Like we know how it all works. Like it's easy to do. But hire before you're ready. It really speaks to the people that are like never ready to hire and they're never going to scale. Right? Or they're always going to do the stuff they don't like to do. The second aspect of it, in my mind, is it always seems like a really big expense to hire someone, but I found that the more people I hire, the more money the company makes, because we can do more things. We can be more productive. Now, they have to be smart hires. They have to be good culture fits. They have to be people that care about the company and the team and the vision and everything like that. But I have found that whenever there's a decision of like, man, this is really going to stress the company financially, making these hires or hiring this new position or opening this department, I've always stressed about that. And then I've remembered every time I do this, revenue shoots up to cover that cost and more because I've made this investment in the company. So there's a couple reasons, like you hire before you're ready financially, and then again, if it's a good solid hire and a smart way, way to do it in the right person, then financially your company's going to take care of itself and be able to handle that. And then hire before you're ready, as far as like sort of understanding how it really works. Like you went out and bought houses before you kind of understood how to buy houses. Like that's kind of what you need to do, I think, when you're getting started.
Like once you hire somebody, hiring the next person is a little bit easier because they could train them too. So I didn't have to do as much like in-depth talking to this next person, so it makes it a lot easier in that aspect too.
What was the first thing that you outsourced? So like when you hired this first employee, like what was the first thing you said, take off my plate? The phone calls or something like that?
It was, I would say, the listings of the properties. So listing them on Zillow, all that. All the tenant phone calls would now go to this virtual assistant who would then reach out to me if there's an issue. So he's basically the middleman. And then the bookkeeping, I started that pretty early with him to teach him how to record expenses and all that. And I think bookkeeping is probably one of the first things people should try and hire out because it takes a lot of time and people don't know. The earlier you get started with it, the better you are in the future.
That's another big issue, I think, that I see in like companies is the lack of trust. And so bookkeeping is the last thing that people will hire out, but it's the least, they know the least about it, right? Or they're not doing it correctly, or the kind of the most savvy way of doing it. So like that was not me. That was one of the first thing that I had to get off my plate. Was actually, I never like fully took it on my plate from the start. I was like, we have someone on our team that really understands property accounting and everything like that at a CPA level, like absolutely. But yeah, so you understood bookkeeping and you still wanted bookkeeping off your plate. Was that so you could go out and find more deals? And
that too, but yeah, to get some time back to find more deals and work on the properties if I needed to. Because I was still swinging the hammers at this point sometimes and going to properties and fixing stuff. I still did pay, I still do this every week, and I spend a couple hours going over all the books to make sure everything got categorized correctly. So I was still doing that, so I still look at it. I kind of enjoy it a little bit. It brings a little, like I got something done and stuff like that. And it's fun to see, like after I bookkeep it all, see the profit and loss and everything, see if where I'm losing money, where I'm making money.
Is there any, well, I guess you just said it. I was going to ask about accountability. So you obviously are still reviewing the books, which I think is important. You're doing that on a routine basis. How have you dealt with, there's a lot of leadership involved when you start having employees. Have you had any issues with like getting things done but not micromanaging or like balancing the leadership style or anything, or has it come pretty natural with the people that you've hired?
Yeah, no, that's hard. That's still something I deal with, like how much should I want to be involved in making sure they're doing stuff right. And they still make mistakes all the time, but sometimes I try not to. I guess if it's not like a detrimental mistake, I won't I won't talk to them right away about it. I'll wait a little bit and be like, you should have done it this way. Because sometimes I get like super upset because sometimes I'm super specific of like what needs to be done and they still don't do it. That's what contractors too, of course. But we do weekly 2 meetings a week. But besides that, I give them calls throughout the week sometimes if I need them to do anything. And then we have a text message group where they kind of keep me updated, like if any evictions or any calls they get, any repairs and stuff like that. Balancing not micromanaging and managing and trying, because I'm trying to let them kind of steer the ship, which they kind of are. I'm kind of just the backbone if they need me.
Yeah, and that's a good way to be. I mean, you're on the right track for sure with that. There is kind of like the saying is, if it's done 80% the way you want it done, I mean, now, like a financial thing might need to be like 100%, but like if it's done largely the operational tasks are done 80% the way you want it done, just let it be. And then, because that's still better than you doing it. And then there's also the leadership capital that you need to decide when you want to spend it. and you want to spend leadership capital sometimes, and there's other times you don't want to spend the capital, meaning like you've developed people. It could also be somewhat interchanged with the relationship capital, but you don't really want to like, do you want to spend that capital that you built as a leader or in the relationship on this issue? And like, it's a yes or no, right? And so there's some things that you kind of just like, all right, I'm not going to spend my capital now because it's best spent, like we really need this other thing to happen, and so that's where I'm going to focus. Or you know, I just spent a ton of capital reprimanding someone for doing something wildly, you know, outside of the bounds, and now there's a small thing. Let's try to build some more relationship capital before we really touch on that. You know,
when you say capital, are you talking energy or are you talking actual capital?
I'm talking
money?
like if me and you, it's imaginary, right? So it's like it's like as a leader, every time me and you interact, I'm building some capital with you as a leader. If you would work for me, or if I worked for you, every time we interact, you're building some capital as a leader. Now, if our interaction was negative, you're losing some capital, meaning you're getting poorer with your leadership for me, right? Like my level of respect or care, or that how much I like you or how much I want you to be my leader has gone down a little bit, likely to some extent, right? Or we've damaged our not damaged, we've lowered our relationship capital a little bit. So you can look at it like relationship capital would be just between people, not in a leadership sense, but you also have relationships as a leader. So that's why I say it can kind of be interchangeable. But leadership capital would be like, if I have to ask you to do a bunch of things and you did some things right, some things wrong, like I really need to navigate what I'm going to spend my time correcting. An example that I've heard is like if you're in the military and you really need to build this relationship capital, the trust, and you need your people to know, like, and trust you and respect you as a leader. You want to build this relationship or the leadership capital with them. Are you going to freaking like drop them for push-ups or like reprimand them if they had like one like wrong crease in their uniform on a day where it wasn't important? Like just don't bring, like, you don't want to use that capital on that. Now if they went and got a DUI over the weekend, you're gonna use some capital because you're gonna have to get them straight, right? And so you need to know when you're going to invest that leadership capital, just like you would invest capital in a business. When is it smart to invest that capital in a company? When is it smart to invest leadership capital into this person right now, or relationship capital, to use some of that relationship capital to say, hey, like, you were late to the meeting today, please be on time. Like that used a little bit of capital because now you feel like some kind of way. It was a little bit, but like, you know, but now I want to build that back up. Later in the meeting, I might say like, hey, Dillon's, you know, knocked out an awesome like project this week, like super, you know, and then boom, I've just built some more relationship capital. But over time, you're spending, and you're either gaining or spending relationship capital in every interaction that you have with your team. And so that's kind of how I look at things. It's like when I look across my team, I'm like, I look at individuals and it's almost like they have a bank of relationship capital and leadership capital above their head, and I'm like being very cautious about how I interact, to be sure that if I just had to use a bunch of leadership capital, I want to try to restore that and make sure that they know that I care about them and that I want them to win and I respect them and things like that, even though we just had to have a very difficult conversation. And so if they, like, again, show up 1 minute late to the meeting the next day, assuming that conversation wasn't about being late, you know, something wildly different, if they like show up on time for a meeting or 1 minute late, I might let it slide if we just had a really tough conversation over here, assuming it's not related.
Yeah.
So, anyway.
So you're saying correcting people correcting your team spends your relationship, and then complimenting people, you can gain that back.
And so you can look at it from a leadership sense, you can look at it from a relationship sense with your spouse.
Yeah.
Like if you just said something to your spouse that maybe wasn't so great, like, you just spent some capital and you got to earn that back, you know.
Got to give her foot rubs.
Yeah, exactly. Yeah. So, but that's the idea. Like, I think that's a good way to like look at how you operate with your team. To be a good leader that someone wants to work for is like, you really got to pay attention to how much capital you have earned with that person, and it's how you treat them and things, how you talk to them and things like that. But as you scale a team, you start to learn these things that, and it sounds like you already have this mindset, but it is. You let them work sometimes, even when they're making mistakes, as long as it's not egregious or anything like that, or detrimental to the company. And then, you know, at some point later, when you're ready to spend that capital, you can go and correct that. Like if they do it 3 or 4 times, it might make sense now to spend a little bit of capital in that correction and then keep rolling. You know?
Yeah.
So,
and you could relate the similar thing to contractors. Like, for example, 100%. Yesterday we needed to get a sump pump to drain a crawl space of water.
Yeah.
And So it didn't need a tether switch, which is for those that don't know, when the water comes up, then the sump pump turns on because it's a floater. But some of them don't have it; they're just on. So we needed one that was just on. So he went and got the wrong one, but I didn't tell him he got the wrong one. So I wasted money kind of doing this. But he brought it back to the property, realized he got the wrong one, and had to go get the right one. So it's just stuff like that. And then after I said, make sure now if it happens again, then I'm going to.
That's exactly right. And that's probably why a lot of people like you and want to do business with you, is because you have that mindset. There's so many people that's like, dude, you cost me $200. And they ruin a relationship over something that you're not going to know about that $200 a year from now, but you're going to know if you don't have that contractor relationship, right? And there was actually one contractor that had done so much work for Peak, and he had done so much work for me and my own investments, and he was just a good guy that we wanted to support. He did good work. He was reasonably priced. And I went and met him at a property and very specifically said, I need you to paint this detached garage. It's in bad shape. I need you to paint it. It needs to look better. A day or two later, the entire house is painted.
Oh my gosh.
The entire house is painted, and the detached garage. Now, I look at it and I'm like, it's not what I said. This is going to cost me a few $1,000s. But then I look at it and I'm like, he did it in a couple of days. He did a good job. He's reasonably priced. The house looks way better, way better. I was just trying to save some money, right?
Yeah.
The house looks way better. I worked with him for years. He makes 1 or 2 mistakes a year. I never said a word. He sent me the invoice, and I paid it. No, I'm not gonna,
you didn't even bring it up?
No, didn't even bring it up because I don't want him to feel bad. I don't want him to think I said, thank you. I appreciate your work on this house.
Interesting.
Now, if I go, the next time I ask him to paint something, I'm going to be very clear in my instructions. I'm going to be very clear and say, hey, this is all. Do you understand? Can you read that back to me? But I'm not going to say because you screwed up on this other app, because I'm using that cabinet and people don't want to work with me, right?
Yeah.
And so I will constantly, our employees make a mistake. Great. They had the option to make decisions, and they're learning and they're being empowered. I'm not going to go rag them for it. I'm not, unless it's literally theft or something like that. I'm not going to withhold it from pay. It's tuition, and we all get stronger as a team, right? And so we eat that as a company, but it's that I don't want to. Now, again, if it's egregious, I'm going to use some of that capital and say, hey, look, this is our policy, and this is what we're doing. And I know I'm losing some capital with you and your friends on the team by having this conversation, but it's worth it.
Yeah.
And so, but yeah, you not mentioning anything on Sump Pump is a perfect example of really prioritizing that relationship first and understanding that people are going to make mistakes, and you're going to grow a great team because of that. And you already have.
Yeah.
So awesome, man. I think the reason I like getting one, I'm really passionate about the leadership and relationship stuff. I really get driven on that as a part of a entrepreneur. That's really what drives me. But I also think there's a lot of people out there that want to scale teams, and it's hard. I've had investors come to me that have 10, 15 employees, in-person employees that quit every week. And they're like, we need you to manage the property. We can't. And the investor would say, I'm a horrible leader. I don't want to manage people. And there are people out there that maybe could do a little bit better and retain team members or retain VAs, or we call them RTMs, remote team members, but retain this help and build better teams that they understand, sort of the 80-20 rule or delegation or relationship capital, leadership capital, and things like that.
Yeah, it's great points. I'm actually learning a lot from this.
Yeah. You've done flips, you've done long-term, you've done mid-term, you've done short-term. Why did you diversify?
From what, long-term to now mid-term and short-term?
Yeah, why are you doing all this different stuff? Just playing the game?
Yeah, so I still try and do a few BRRRRs. It's harder to make it make sense, of course.
Right.
The reason I got into midterms was Airbnb was really big in 2020, 2021. So I saw how much people were making and stuff like that.
Yeah.
A lot of people were talking about on YouTube. And it was before kind of the peak of it.
Yep.
Or it was during, as it was rising to the peak. Now it's a lot harder because there's so much supply with Airbnb.
Right.
So I saw how much I was people were making. My buddy was doing it in Norfolk. So I kind of used him as my mentor for it. And it just would make almost triple what it would make in long term at the time. Yeah. So all I would do is furnish, and it was kind of fun at the time. It was kind of fun to just to message tenants back and forth. Now I don't like it. Now my wife handles that. So
does she like it, or is she great?
She gets stressed out sometimes, especially with the cleaners and the complaints and stuff like that. Making sure the cleaners are there, but it's more of the cleaner doesn't do a great job, and then she hears it from
it's a bummer.
people, and then we have to refund them and stuff like that. But the reason I got into, like, I have 2 short terms that are like more, I guess, luxury Airbnbs. One of them's on Matthews County. It's a 9-bedroom, 7-bath.
It's a beautiful property.
Yeah, and that one is fun. That one needed a lot of work. Has a pickleball court, indoor pool, a sauna. So I keep trying to add more amenities to make it stand out. But the reason I got that one is because I was 1031ing out of a quadplex in Petersburg. So I sold that, and I had like a $220,000 gain that I would have had to pay taxes on. So in a 1031, you have 45 days to identify a property. So it was coming to like the 42nd day, and I didn't have anything. So I went and checked out this property and got it under contract.
Was it on the MLS or something?
It was on the MLS, and it had a pipe burst.
Okay.
Like, I guess within the last few months. And so I got it for a pretty deep discount because all the hardwood floors were pulled out. Yeah. They wanted it as is sale and everything. And nice. Yeah, I got that one for like, it was $680, I think. So I 1031 into that one, fixed that one up, and it kind of became an Airbnb. I wasn't really looking when I was 1031 out of it to do an Airbnb, but it kind of just fell in my lap. And that one's cash flows pretty well. The short terms in Richmond, I converted to midterms because the Airbnb data, or the Airbnb kind of got not much better than the long term after over time. And it was also a triplex, so tenants would kind of complain about each other, like footsteps upstairs.
Yeah, for sure.
When people want an Airbnb, they kind of want their own space for the most part. It was also really old property, like 1860s, so floors were like a little little loopy. So with midterms, you don't get as many complaints. Once they're in, as long as they're there for 2 days, they'll probably do their term. Yeah. Sometimes they get there and they're like, oh wait, no, this place is not was the lease, can I get out of this lease? And we're just like, okay, you can get out of the lease because we're not going to make people stay there after they just moved in.
So you can still get higher cash flow, a little bit less work, a little bit less risk because you're staying longer in the midterm. Higher cash flow than long term.
Higher cash flow than long term. I would still say short term
is higher cash.
Right.
I look at it as like, because we get this question all the time. It's like, well, we're thinking about doing long term, but we're also thinking about Airbnb in it, and we're like, cool. Like, Airbnb, a lot of work. You could hire someone to manage it, but it's a lot more work, but also a lot more cash flow. And it's a little bit more expensive, but a lot more cash flow. Right. And then midterm is a little bit less work, a little bit less risk, in my opinion. There's risk all across the board, but like a little bit less risk, and then a little bit less work, a little bit less cash flow, but still more than long term. Long term, in my opinion, a little bit less risk than midterm, a little bit less cash flow, et cetera, but a lot less work. And so like it really just depends on how much work you want to put into it, what kind of team you have that can help you with it, what your goals are, what your ambitions are, what your financial needs are, and then to understand the difference between the three. I usually would say, like, if it's a short term, make sure it could be a midterm or a long term if possible. Like make sure it still makes sense. There are points, like if you're buying a vacation property that's a short term, the appreciation that comes out of that, and then just I don't know did your family use it? Yeah,
well, we use it a lot. We go there probably like 3 times a year, like with a bunch of people, maybe 4 times a year with a bunch of people. And then me and my wife go there sometimes.
That's what I'm saying. So like that holds a lot of value too. Like on paper, whatever, like it might mess up the investment numbers a little bit, but like just having that out, especially with kids, like for me, it was a life I never could have dreamed of. Like we have vacation property that our family gets to use, and we got that seller finance, 0 down payment, like 0% interest, like all these just ridiculous terms. So it's not like that fancy or expensive or whatever, but the idea is like it creates a lifestyle that I never would have dreamed we could just go to the beach whenever we want and hang out,
Yeah, it's awesome. And then when your kids grow up and they get a bunch of friends, like now they're bringing their friends, their cousins and everything, and then everyone's all at one place, and it's awesome. It's
awesome to provide that for your family. So it's cool that you were able to find an avenue to make that work. So you have this gorgeous property in a gorgeous area. And then you, I assume, put a lot of money into it, fixed it up, made it nicer, and then now your family can enjoy it. You can you can rent it short term and things like that.
Yeah, exactly.
That's cool. Were there any flips that just didn't go well that you learned on? Like, were there flips that ended up negative for you or close or break even or anything like that?
Yes, even recently, it's been harder to flip this last couple of years actually, but for some reason I was never the greatest. Like I hear people making 60,000, 70,000 a flip, and I'm just like, what the heck? How do you make that much on a flip? Because like I think the most I've ever made was like 49, and that was just on one flip, and then everything else has been like sub 20. Maybe it could be two things. Maybe it's because I put every single expense, like on, some people might not be factoring purchase closing costs, ending closing costs, interest costs, anything like that. They might not be factoring that in, and maybe that's why they're making $60K on paper. I'm not saying they do that, but that could be a reason why my flips look less. Or I could just be bad at flipping. It could be one or the other. But just last year, or the end of last year, I lost like $14,000 on a flip. Because fix it up, it went under contract for a decently high price where I would have made like 15.
Yeah.
Someone went, or the guy inspector went in the crawl space, saw like a rotted sill plate and some fungus on the joists.
Nice.
And kind of scared the buyer.
Yep.
So then it went off the market and sat on the market for like another 2 months before it went back under contract at a price like $15,000 less. So if you include that with the holding costs, it was probably like $3,000 a month just for the interest costs and all that. I mean, it adds up. I mean, the speed is the biggest thing. I think part of the reason I don't flip that much is because I just think BRRRR is a lot more simple. You don't have to deal with buyers, inspections. You don't have to deal with like other agents and stuff like that. So I usually try and I want to hold anyway for long-term appreciation and future cash flow. Even though I might not cash flow much today, I'm looking into the future 5 years from now. Like, I assume rents are going to be up, and I assume appreciation is going to be up as well. So that's kind of, I'm looking for the longer term picture, which is what I've done in the past, and it's really paid off.
Yeah, you're playing a good game, I think. Like, I flipped, I think maybe 2 properties. One definitely was like a true flip. The other one's a bit questionable, and it was an absolute. It's kind of the same with wholesaling. I basically was like, okay, cool. Like, we had an opportunity that wouldn't have worked well for a rental, but we had a really good buy on a house, and it was in a really good area. And I was just like, all right, so I guess I'll flip it. Like, let's take advantage of this. And so it was the first one I'd ever done. It was to be fair, it was in the middle of like all the BRRRRs. So I was rehabbing houses and stuff. It wasn't any like different. I was just going to sell it at the end instead of refinance. So it wasn't like some big project that I stepped into, had never done before. But it was the first like technical flip that I'd entered into. And I think we had invested somewhere, it was years ago, so don't quote me on this, but we had invested somewhere around 160 total in the deal. I'll say 170 total in the deal. And then we sold it for 350. And I was just like, wow, like I should do more of that. Yeah. And then I just like, I never wanted to do it again. Like it was it was way too stressful for me. Like, what if it sells? What if it doesn't sell? Dealing with like buyers and all this. I was just like, I don't want anything to do with this. Like, the project got drawn out. So some of that, there was a lot of holding costs, expense, like eaten up in that. We found out like the contractor didn't pull some of the permits he was supposed to pull. So when Dominion Energy showed up to like approve the new panel, and now we got to like start over on that. And so it was just way too stressful. Whereas like the BRRRR, I control the whole process and the outcome and everything. I felt like I was way more in control. Yeah. But the flip was like we got paid really well, but I still wasn't that attracted to it because I also knew, I was like, I don't think that's going to happen again. Like I think it was a one-off, but I kind of laughed because it was some of their wholesaling. I was like, let me start wholesaling because then I can keep the deals I want. I can wholesale. Like, it seems smart to start a wholesaling company. So I started. The first week I said I was going to start wholesaling, I found a house through the leads that I'd paid for, like my first batch of leads, found a house and whatever, like wanted to go look at it or whatever. And so I showed up in the morning, contacted the seller while I was there, probably just called him and said, hey, I'll give you this much for the house. He said, okay. And I was like, oh. Well, this is easy. And then so I wrote a contract up and he accepted it like same day. And then I was like, well, I'm wholesaling this. This is the intent. Because I was like, do I BRRRR it? Like, I should BRRRR this. And then I went and made one phone call, or I think even an email, and said, hey, I have this house. Look at the address. This is the cost. The key is the lockbox is this. Let me know if you want to get it. And I signed it for like $20,000 or $25,000 higher. And they were like, cool. The next day they assigned it. And I was just like, yeah, I'm going to start doing that. Then I tried to wholesale for about a year after that. And I think I got one more deal. Oh, wow. But I was like, dude, but it still was like this big misconception that I was like, it was so easy. Yeah. And I was like, oh man, now I got to figure out marketing. So I think I actually invested like $20,000 more into that company over the next 6 months or so to wipe out whatever I just made. And then I was like, okay, let's just stick to what I know and like the relationships and community, and then BRRRRing and stuff, or seller finance or whatever, and just buy assets that way. Yeah, I've never actually wholesaled, but I've wholetailed before, and it's the same concept. I just buy it, put it right back on the market, and
it's like, oh, I should be doing this more often.
You know the bummer about that? The people that bought it, that assigned it, are way smarter than me. So they took the assignment and they just put it on the market for like $60,000.
The one you sold?
Yeah.
And they got it?
Yeah. So I'm an idiot. Like I made money, but I'm the big idiot in there. Where like literally they were like, yeah, we'll take it. And quite frankly, these people I was trying to do a favor because they looked out for me. They had spent time with me, helped me understood some stuff about real estate, connected me to people. And so I was like, cool, opportunity, let's give it to them. And I think this is a reasonable price. And they said, sweet, I'll take it, thank you. And then like the next week or something like that, they probably like power washed it and put it on the market for like $60,000 more. I was like, I think I messaged them, was like, hey, did you fix like the massive mold issue? And they were like, no, but we've disclosed it and it's like, it's all there. And it sold. And I was like,
Yeah. That's why I like it depends on the market, but sometimes wholesaling is better than wholesaling.
So I've definitely made my mistakes too. You have a strong network now. Like you've been to Richmond Ring. You have all kinds of friends there that also invest in real estate. What does that network do for you, and what does it mean to you?
I think it's almost like the reason where I am today is also because of my network. It's that same saying, get around 5 people, you're the average of the 5 best friends. So if your 5 friends have a 6-pack, you'll be the 6th with a 6-pack. If your 5 other friends are a millionaire, you'll be the next person that's a millionaire. And I really do take that to heart. So I kind of try and pick a little bit and make sure I'm not hanging out with negative people that will bring me down, similar to what we said earlier. And I think because of that, it really builds more confidence in you, and you're able to do more things, take on more risk, and also spitball ideas off of people and use them as resources as for like lending, or any time that you get a deal that you want to partner with or anything like that, you have people in your pocket that like, and trust already. Yeah. So it makes it super simple.
I think it's awesome because it's not the crabs in the bucket mentality that so many humans have, where it's like, man, Dillon is crushing it. Like almost like my ego got me like early on when I saw you on YouTube. I'm like, man, I don't know. Like I could probably figure that out too. Where like a lot of people naturally go that way, and then I got to check myself on that. Where I'm like, wait a second, like he's doing some great stuff. Like, yeah, we probably should learn from him. And now like I'm have learned a lot over the years. Like that was probably like a glitch, but I've usually been pretty like, awesome, let's learn from them. But I for whatever, I think that's why that moment stands out, is because it's typically unlike me, but I think I was like on guard for some reason. But either way, like you have people around you that are like, that genuinely are happy if you make millions of dollars or have 100 more houses, or get like, they would cheer for you and they would support you and figure out how they can help you do more. Right.
Yeah.
And that's the people that you have around you versus the people that's like, God, man, you got another house. Like, this, like, how am I going to keep up, or how am I going to make him slow down so I can look better, or something. Like, you're surrounded by people that really truly want you to win, and will give you the advice and the resources and the insight and the share the deals and stuff like that to help you get there, which is, I can't really speak for other markets, but that's in Richmond. And if you're an investor in Richmond, we should really be looking for those communities.
Yeah, Richmond's a great market for that stuff.
All right, so we're about to wrap up, but I want to talk about one more investment that you made. You bought a 70-unit storage facility.
Oh yeah.
Now we know that storage facilities are like pretty hot. Like they're typically like pretty hot assets. People are talking about car washes and self-storage and stuff like that. What got you into the storage facility, and how was that transaction? How was that mindset a little bit different than the residential stuff you've been doing?
Yeah, so the way I found is on the MLS, I have like a bunch of different saved filters, or like similar to Zillow if you have a bunch of saved filters. So I was looking at like really large square footage properties because I'm just kind of interested in that. I wanted to buy some large square footage, whether to see what I could do with the warehouse space. And that popped up because it had pretty large square footage, and it was a decent price. It's in Farmville, Virginia.
Cool.
So it's like 3 separate buildings, all with about 30 or roughly 25 to 30 units each, but it's a total of 70 units. And they were selling it for a decent price of $270,000, which I thought was like super low. So I went and looked at it. Everything seemed to be checked out. There was a lot seemed to be checked out. So I made an offer of $250 at first. So I made the offer. They accepted. So I was in a due diligence period now. So I was getting like surveys and all that done. And then I found some issues with it. So first off, they did disclose it was in a flood zone. So the property's in a flood zone. And when I hear flood zone, I just think, okay, maybe it floods once every 100 years, once every 200 years. But this one was a little bit different because I called the county to like figure out zoning stuff and everything. And they're like, yeah, I think this got shut down for like last year because it flooded or something. And I was like, I did not even hear this from the seller. So then I looked up Farmville floods on Google, and then there's like videos. It's the building that I was buying, like with water, like the streets closed off and water like a little bit over the door.
Holy cow!
So I was like, do I even want this anymore? So I went back to the seller, and I didn't really want to just back out. So I gave him a counter at so I called him and told him the situation. I even sent him like pictures of like videos.
Show him the video.
Yeah, and it was 3 different times. It was like 2018, 2020, 2024.
Holy cow!
And so I was like, hey man, this is happening. I buy it for $190 if you wanted to do that. So they came back at $198 because of the flooding, and I did end up closing on it. And I know you're going to ask, what am I going to do to prevent the flooding? I bought some barriers because there's only 2 doors. Because there's only 2 doors, right? So I bought some barriers to cover the doors. The rest is just all brick, so it's all in. Problem is you have to manually go out there before a flood and put it on so water can't seep into the storage unit. Right. So hopefully I could catch it in time and prevent the flood. But I'm just kind of hoping that doesn't flood anymore.
Well, you might have about 5 years to fix that issue.
Yeah.
Are you gonna get like it's all brick? Are you gonna get the inside of like the brick like sealed or anything?
It's painted already, so I guess that will help
That'll
seal
help a little bit, maybe.
It doesn't normally get that much higher than the actual concrete floor, though. Based on what I saw, it might be like a couple inches above it. So as long as like it seals it out from that point.
You have good insurance on it? Working on it?
I don't even have flood insurance on it, actually.
Yeah, you might want to consider that.
But it's just I'm not going to pay to get it revamped because it's just a concrete slab with steel storage units. Right. So if a flood happens at like a foot high,
right?
I do make all the I guess they're tenants. All the tenants get insurance though, and that's in our lease. So if it does flood, they can't come back and sue me.
Got it. Yeah. So
hopefully.
Yeah, and you could probably go as far as to like just make a note that like if it may flood from time to time, just be careful, and then like make sure they get the proper insurance in place, and then just let it. I mean, as long as you disclose it, and which I don't even know if you have to, but ethically, if you're like disclose it and then make sure they have the insurance in place, it's up to them to decide if they want to take the risk or not, or what they want to store in there. Is it waterproof? Is it super sentimental and valuable and shouldn't get wet or damp or anything like that? Or is it something that, whatever?
Yeah.
We do the same with like a lot of our houses are old houses that we manage, and they have basements that are wet basements that, water will get in them from time to time. And so in our lease, we'll say like, don't store anything in the basement that you don't want to get wet. And like we'll make sure the tenants understand up front that this basement is not waterproof. It will get. That's why there's a sump in there, or there's drainage, and like it's maintained and everything. Everything is made for that to happen. But if it gets a lot, like obviously we'll do something about it. But like if you see like little streams of water going to the drain, that's kind of how it is. Yeah. So,
it's very similar.
Yeah. So you've grown pretty quickly. You have a bunch of investments now. How do you keep from like burning out and keep your mindset positive and moving forward?
I think this is probably one of the reasons why I'm getting into new asset classes like storage units, these Airbnbs. Just kind of switching it up a little bit, keeping something new every day. Mm-hmm. Trying to wake up with something to do, some new challenge. I try and do that a lot. I try and do that every day, trying to make sure there's something that pushes me to the next level. Right. I still do the BRRRRs, of course, because I kind of got that a little bit more on autopilot because I have a full-time construction crew, and obviously the bankers. I just know the process really well, so I still want to build wealth that way. But I also try and keep my life as interesting as possible with buying these new asset classes.
What's in the future for you? You mentioned you're looking at some bigger stuff, or are you going to go more towards the vacation route? You're like still do some BRRRRs, but more storage facilities or anything like that? Yeah,
I'm still looking for storage facilities. Still definitely do BRRRR, but try and scale it out a little bit more where I'm less involved. Because I still go to the property like twice a week on the bigger renovation projects. Try and scale that out a little bit more. Maybe hire somebody in-house as well to help facilitate the storage units and help with the rentals too. Yeah, I haven't decided on that yet, but I guess I should take my own advice and hire before I'm ready.
Yeah, just hire someone. Maybe like even like a project manager that can help you not go on site as much, but also like someone like that could probably handle some of the management and some of some of the other things as well.
Yeah, that's a good point. But Airbnbs is also still want to do that, but I'm starting to get the point where I have one in Wintergreen now, and then one all the way over here in Matthews. Yeah. But it kind of sucks because like if I have to go out there and do something or like want to work on the project, it takes my whole day over here, and I can't come over here to this one. And same with the storage unit, because the storage unit's like over here too. So getting them far away kind of does drain you a little bit, because if I have to go to each one, let's say once a week, but I mean that's not the case, but something could happen where I would have to go to each one once a week. Just problems happening at Airbnbs and stuff like that. Then like that's 3 days out of my week that are kind of just taken up.
Yeah, and you still look at the value of each and the lifestyle that each provides. Like, it's worth it, and then you get to a point where you either hire or get the right relationships in those areas that you trust that can take care of those assets for you without you going out there and stuff. So you'll figure, you're moving quick and you're building fast, so like you'll figure all that out as far as these sort of somewhat newer assets at Wintergreen and Vacation, the storage facility and stuff. Like, you figured everything else out, like you'll figure out how to make that work too. Right. But right now what's important is like you've acquired those assets and you're building wealth, and you're learning how to manage that, and you're providing for your family and stuff like that, which is awesome.
Yeah, and it's fun. I'm having a great time doing it.
How can people find you if they wanted to get in touch with you?
I guess Instagram would probably be the best place. Cool. Dillon Dull, Dillon Dull.
Awesome. Cool. We'll
or Facebook.
We'll put a little put your handle in there in the podcast so people can reach out if they want. Any final thoughts?
Final thoughts, I guess, would be if you're looking to get into it, just jump in. Would be my best advice for someone trying to learn.
What does that look like? What is that first action step? And I know there's a million different goals that people might have, or financial situations or whatever, like generally speaking. What would the first action be?
Well, first off, it would be making offers, of course. So the more offers you make, the more it'll be accepted. But to get that confidence to make offers, get around the right people that can give you confidence or help you gain confidence to make offers and buy deals.
Right. And you would probably say like Richmond Ring or something like that.
Yeah. Oh, yeah. Go to Richmond Ring. You'll find a bunch of connections there.
Yeah. Cool.
And listen to podcasts. Listen to the Virginia Investors podcast.
Yeah, for sure. Podcast, local meetups, and there's others outside of Ring, but Ring is a great one. Thank you for coming on the podcast and sharing your story, man. You've definitely inspired me over the years for what you've done. I really appreciate the network that you built and the people that you hang around and kind of how you carry yourself, and I know that you're going to do really well. So keep up the good work, and I appreciate you coming on the podcast.
Thanks, man. I had a blast on here. It's always good seeing old Steven.
Yeah, that's right. Thanks, man.